All right, what's going on, guys? So I am Zae Holmes. I do the technical analysis here at Independent Trading University. For those that don't know, we do have some students on right now. One, in fact, who is currently taking part of our ITU boot camp these last 30 days. I've also had the opportunity to tap in with Lightspeed Investing the last couple of weeks and get the experience of how things kind of go about there. And it has been truly eye-opening and phenomenal. So today we have Philip Chan and Brandon, who is the technical side of things with Lightspeed, and
Yep.
he's been able to retire as well since last year. And Philip is the CEO there at Lightspeed. Thank you guys for joining us today.
Absolutely,
Yeah,
man.
definitely.
Man, happy to be here.
Awesome, awesome. So, guys, what Philip has done is he's opened up the door to kind of share some insight, give you guys some key points, ask questions once a month with their team. So this is a truly phenomenal opportunity that you don't really want to miss ever, right? In the next about 20 minutes, what we have at this time, please feel free to ask questions. Phil, how's things been for you and Brandon the last 30
Oh,
days?
dude, it's been amazing. As I was telling you, we just came back from a barrage of 6 back-to-back business trips. So we're always flying. We're always shaking hands, learning new information from people who are subject matter experts in their own right. So we just got back from Beverly Hills this last weekend, and I'm just finally happy to be settled in Kansas here, where we can focus on the work. Been running around with calls pretty much all day, every day since we've been back. But I'm happy to do this one and super excited to tackle on whatever questions you guys may have and pass on some of the gems and knowledge that we were able to pick up, especially during some of those trips that we were just on.
Oh, for sure, for sure. How about you, Brandon? How's your last couple of weeks been?
Yeah, phenomenal. Yeah, I've been traveling along with Philip as well, meeting a lot of different great people. I'm also developing some other AI softwares related to trading. So at these conferences, I've actually been able to make a lot of connections from that related to this who can actually help me out and scale these systems. So it's been, yeah, a really phenomenal time. And then as always, you can trade from anywhere. So that's always
That's right.
been really great. So,
That's why we love what we do, right?
yep, 100%.
So I wanted to ask you guys because one thing that I noticed myself being on those calls is the very, very high level of size that I know Cal uses. I'm sure, and then he's even shown students, right? Maybe not to his level, but they've been able to manage size appropriately. What are your guys' thoughts on as far as managing risk appropriately to build the belief to even add size of that magnitude?
Yeah, and say just so my business partner, he's a bona fide hedge fund manager, so he does like to keep a more private persona. So so when we talk about our elite trader of the firm, you know who we're referring to internally.
Yes, of course. Gotcha.
But yeah,
Gotcha.
but yeah, Brandon can handle that one in terms of how do you have proper risk management, especially as you go into bigger sizes without exposing yourself to additional risk.
Yeah. So it's all about consistent sizing for each trade, right? So it's not like we're putting on, a larger risk with one trade than another. The risk stays exactly the same every single trade. And that's because you have a set win rate, right? With the strategy that we teach people, it's a very systematic process for entering and exiting the markets the right way. So as long as you stick to that system, you're going to be consistently profitable over the course of time. You should be able to extract a weekly paycheck from the markets no matter what, because we're capable of making money when the market goes up, down, and sideways. So what we're doing is ensuring no matter how large our stop loss is, the stop loss, depending on market conditions, could be anywhere between 2 points all the way up to 50 points, right? But you got to make sure the dollar amount for that stop loss is going to be exactly the same every single trade. So that you ensure that maybe you take one loss, but you take 5 wins, that those 5 wins are going to be much larger, right, than that one loss. So it's about consistent stop loss sizing for every single trade. And if you're taking, say, 20, 30 trades per week, you're going to be extremely profitable as long as you have a good win rate. Now, with our strategy and our methodology, our goal is for you to at least get to an 80% win rate. So like the 80-20 rule, right? You're winning 80% of the time. Now, our lead trader, he's actually capable of getting a much higher win rate than that. His win rate goes all the way up to 95%. And he's risking even smaller amounts of money. Now, the way he can actually go into these trades is because he can add size as the market moves in his direction. So say he puts on a 10-point stop loss, Maybe that 10-point stop loss is only $1,000 stop loss. So if he gets stopped out, he's going to lose $1,000. But once you add into that trade, you're adding in another $50,000, $100,000 position size potentially. And now instead of just risking $1,000 to say make $5,000, he's risking $1,000 to make $100,000. And that's exactly the level that we're able to get to with this asymmetric risk to reward, right? You start with a fixed stop loss amount. If you're wrong, you're just taking that loss, whatever it may be. If you determine it's $100, you could determine it's $5,000, whatever your risk level is, right? But based upon your risk level, if you're able to take the exact same amount of risk every trade, but on some trades you add into it as the market goes in your favor, you can outperform the traditional 1-to-3 risk to reward ratio, where now instead of risking $1 to make $3, you could be risking $1 to make 10. Or in sometimes our lead traders instance, he's risking $1 to make 100 or even more. I mean, today he was able to do over a $400,000 trade, right? Just the other day. So that's a $400,000 trade. Yeah. Just the other day, yesterday. And today he's doing the exact same thing. He's just not showcasing it live, right? So we go live Tuesday and Thursday morning, but you'll see the exact same thing as he's going live on those days, where he's risking very small amounts and having extremely large trades if the market will move in your favor, right? So that's what it's about.
For sure, for sure. Now, with that being said, and I don't know if you can answer or not, but how quickly do you consider adding into those positions? Is it, hey, I'm going to wait for a candle closure or for it to get to a certain price level to add in? Or is it immediately after certain levels are being broken?
It's pretty much instantaneously once the level is broken. So to say, we'll use different algorithm levels, right? So the 50 is a really strong algorithm level. So now the YM, which is like the Dow US 30, trading around 50,150. You're only looking at those last two digits, right? So that's the 50. So if it starts to hit that 50, you can place a short trade with your fixed, right? With your fixed stop loss amount. Say it's $1,000 fixed stop loss. If it hits that 50 and starts retracing and it starts going down to 48, 46, 45, you're going to start entering your contracts immediately. It could take anywhere from 2 seconds to up to 10, maybe even 30 seconds to start adding in. But as long as it's going in your favor and you see that momentum start to shift based upon our systematic process of seeing when momentum is shifting, then you're able to add into that trade. So it depends on the trade, but it's literally seconds after your first initial trade placement. So
gotcha. Okay, so that makes sense. That makes sense. From a performance standpoint, and Phil, this question for you, do you feel like there's a certain mindset centered around being able to, first of all, execute at that level, think at that magnitude? You know what I mean? Because it's really quick how he's making these decisions. Or I'm sure many of your high-level traders.
Yeah, I mean, dude, mindset and resilience is the cornerstone of the biggest asset that you can have. Any trader, any business person, any person going through life can have. That is one of the biggest things that we hammer, especially me, right? So you have to take the approach of, if you're going to first and foremost risk something, you better be risking what we call your non-heart attack money to alleviate. So we don't run away from emotions, right? You're going to naturally have emotions when it comes to trading, life, right? And psychology. Don't run away from it. Acknowledge it, be aware of it, and fully embrace it. Now, how you can mitigate is the effects of emotions is, first and foremost, if you're trading, you should not be trying to trade and pay your bills, right? You should have the ability to pay your bills separately, right? And that way, regardless if you win or lose, you're not freaking out. Like, you should not be over elated, and you should not be overly upset if you take a win or a loss. Because in medicine, the biggest way of ensuring you have the proper health, if you do not smoke, proper probability of lung cancer decreases drastically, right? So it's all about prevention over treatment. So this goes before the trade, the psychology, the mindset, because it's very, like, I can tell you, hey, be a tough dude, if you break up with your girlfriend, right? Like, it's a heartbreak, bro. It's still going to hurt, right? So what I'm saying is, a lot of traditional advice will go out the window because emotions are involved. And your amygdala is engaged, it's hard to think logically because your system is getting override. The idea here is to recognize that, embrace it, minimize it, and set yourself up from the get-go so that if you are trading bigger sizes, you can maintain composure. Now, that's how you can approach the trading game in different angles and different ways by not necessarily trading your own money. You have great setups according to funded accounts, prop accounts, where, there's pros and cons to everything, but you can leverage other people's money. You pay a monthly subscription. And in that sense, you hit certain criterias before you get your payouts. Now, your payouts are going to be a little bit less, like 90%. And the time at which you get your payouts are going to be delayed as well. But that's because you're using that leverage, right? So, but if you're in that environment, you can risk more and you can lose a bit more without it actually affecting your own bank account. And that's the difference, right? That is the main difference there. So what I'm gonna say is it's not an easy answer to just remain calm during the moment. Like, I can teach you all these things, right? But you're like, dude, I'm not calm right now. Like, I got money on the line. So the best way is to, then think back, okay, well, how can you set yourself up the right way? Because I'm just gonna be real with you, it's hard to avoid those emotions. You understand? I mean, you're a trader, right? So you understand what I'm talking about.
100%. Like, for me, I've always had to eventually I got to the point where the amount I'm risking is help reduce the emotional factor, right? When I get to set a stop loss and, I have like a 50K account and I'm like, okay, I'm taking $100 loss on this trade, I can accept that. You know what I mean? Once you can get to a point of acceptance and you just maintain that risk trade by trade basis, it puts you in a better, situation where those emotions don't rile you up anymore, and hey, there's more opportunity. The market's not going anywhere. That's kind of how I've had to deal with it. Did you ever face that yourself there, Brandon?
Yeah, I mean that's a very common thing, right? So you need to have the confidence in order to, face certain drawdowns that will happen. Like, it's very common to say, okay, well, I'm down on a trade, but I need to stick and have the emotional resilience just to trust my stop loss level. Like, if I have a level that's set on the charts, I need to be able to respect that level and not change it just because my emotions are getting out of hand. Oh, I'm down a certain amount of money. No, you have to stick to the plan no matter what, and make sure you're sticking to a strategic process where emotions aren't getting in your way. And you have to have that confidence. Like, our lead trader always talks about this. He always says, I'm 1,000% sure I'm going to make money tomorrow morning. He even says he'll pay you money if he doesn't make at least $50,000 because he's so confident that he's going to make money no matter what happens in the market. So you got to have that confidence if you're truly going to scale your position size and stick to the trading plan to be profitable over the course of time. So it's all about the emotional control and confidence. So it's a critical thing within trading, and you need to learn how to manage that. So that was the first step I had to take in order to truly get profitable, is overcome the lack of confidence and the emotion. So
I'm gonna say in my experience, the confidence just built from starting to hit profitability. Would that be about the same? Like, as you just make wins, it just builds over that time.
Yeah, managing your emotion is the first step. And then as you get to manage your emotions better and you trust the system, then your confidence grows as you grow confident in yourself that you're not going to exit a trade early and get emotional and mess up the system. The more confidence you have that the system works and you yourself can stick to it, the more you can actually trade, the larger position size you can start placing. So
yeah, and I love on those calls he'll say, you got to believe. You got to believe, man.
That's what it's all about. You got to believe. You got to have that confidence. You got to have 1,000% assurance it's going to work for you.
But I do want to also say you can't have false confidence in the sense that you got to have the belief, but you got to do the work too, right? Like, you can't have the idea, I'm a great athlete, I'm a great basketball player, and never go work on your form, never work on your handles, never work on your court skills. You know what I'm saying? Because if you don't put the reps in, then there's a disconnect, right? There's really three main components to success. You got to think it, you got to say it, and you got to act it. And you got to loop that every single day, because you can be as confident as you want, but then if you don't do the work, and the actions are not aligned with that belief system and the confidence, then really it's, I would say, just a bust. It is just fake confidence, right?
Yeah, that's
Yep.
come with time and
Exactly.
continuous practice. Steve, did you have a question or something you wanted to talk about? Steve's one of our students taking part in the boot camp as well right now. So.
Yeah, gentlemen. So thanks for being here today. I want to just ask a quick question as far as being in the flow. Me and Zay talked about that today. It seems that um, timing is a key factor for myself right now. I've done pretty well at playing defense with my capital, but I think there's always a hidden notion behind my in my mind that I want to catch the reversal. If I come into a session and the move's already happening, but that's kind of interrupting my decisions, because if it's in flow, I'm always thinking about the reversal and I'm missing the opportunity that's in front of me. So I guess my question for you gentlemen is that what could you do as far as the way you think or what you tell yourself in order to really, tighten up that part of the system to stay in that flow?
So for me, and by the way, Steve, I don't know, there's like an echo whenever someone speaks. So if you don't mind just maybe muting yourself as I'm answering, yeah, then that way I can hear. So the question was, if you have a move that's already happening, how do you deal with that, essentially, right, Steve? And so you have to understand, where were you before you learned about the markets? This is what I always go back to. You have to understand the markets have been around for all this time. You learn about it, and now you're getting into it. So just because the markets are doing something does not mean you have to do something. Just because you go in there and the market has already taken off doesn't mean that you need to hit the button. It is just as important in trading successfully to not only identify when it is to enter, but to also identify when it is to not enter. So sometimes if you came in late, you just have to acquiesce. I know it's not going to be the answer that you want to hear, but again, the truth hurts sometimes, right? So what I'm saying is, just because you're going in there and you're seeing the markets moving and you feel the need to maximize the opportunity, doesn't mean that you have to take advantage of that opportunity, because sometimes that may cause you to act more erratically and more irrationally, as opposed to just going, oh, it's already in motion. I'm just going to have to sit back, wait, chill, analyze, and be patient a bit before the next proper entry happens. There's a great saying in business and success principles, right? Do you want to be rich or do you want to be right? Do you want to be rich or do you want to be right? There's someone that's always arguing because they want to win the argument. And it's like, okay, it's cool, dude, but do you want to be rich or do you want to be right? And in this case, it's, do you want to get rich quick or do you want to build wealth? Because if you want to build true wealth, you would have to embrace, and I'm not saying it's easy, it's never easy, but you would have to embrace the concept of, maybe I just need to be a bit more patient. Maybe, oh, I missed the train this time. I'm just going to have to watch the train move, but let me, in a very calm manner, identify where I can have the next opportunity and set myself up so that I capture those when they show up again. It may not happen until 15, 20, or 30 minutes later. And yeah, it's going to be a little bit tempting because you're sitting right there. You are watching the markets move. You're tempted to hit the button, but that may be your best approach.
And that's exactly why we have systematic entries. You're only taking, when you're a beginner trader, you're only taking A+ setups. That means a lot of days you will not take a trade, because it is a lot better to not take a trade than lose money, right? So a $0 day means you did not waste an opportunity. It means that you saved your money, because most people don't have the discipline to sit around on their hands all day and not see a trade, right? But if you're going to do that, you are far more likely to become a profitable trader, because systematic entries right? Based upon your process is going to get you that systematized win rate and risk to reward ratio that you're looking for. If you're just placing a trade randomly on a trend, there's no system to that. So that's not going to work. Like in the long run, that's why people aren't profitable traders, is because they don't have a system that they stick to consistently. So if there's a trend that's happening and I don't see the exact pullback candle that I know will give me my A plus setup, I don't take it. Sometimes you're going to have to let a 200 or 300 point trend go because you did not get a proper entry. And that's okay. It's much better to do that, miss a trade, rather than take a trade and lose money on it. Because the goal is to make as consistent of profits as possible day after day, because that's what's going to increase your confidence. Even if you're only making 10% on your position size every day, which is very small in our world, then that's going to give you confidence over the years to trade larger position sizes rather than just taking random losses here and there. Because it's all about trusting yourself. So if you can trust your process and trust yourself to follow that, you're going to be more profitable over the course of time rather than just randomly entering a trade because you think the market's moving in that direction. So that's what it's all about.
Thanks. Appreciate it.
100% agree, man. And it shows. I love that. Like, I walked through one of the recordings with your head trader, and he lines out some of his set of criteria. And you guys can't take trades without your criteria being met in totality, right?
That's right.
It can't be like one off. Oh well, this is happening. I have a candle pattern, but you may not be taking that candle pattern with structure, with trend.
That's right.
With the EMA cross, or if volume is coming in, whatever your criteria is, it just has to be met for you to hit the button.
And also, Steve, just to continue to give you a bit an additional answer to the previous answer, why are we who we are in terms of Kansas basketball? Right, we win championships because we give up the good shot for the great shot, and we shed individual glory for team victory. So what I'm saying here in trading, because you have to understand it's application of success principles, sometimes you may have to let a 20, 30 point move go so that you can position yourself for a 100 point move. You understand what I mean? It's like you got to make sure you are putting your energy and effort towards the right things. In real estate, they say location, location, location. Just because you have the capital and maybe one of these deals slipped by because the timing has gone by, doesn't mean that you should force yourself into that deal. Because when you force yourself into a deal, then now it may actually backfire on you, which you may have experienced that yourself because you just get your computer set up and you're like, oh, a move's happening, but I was a little bit late to it. Do I still take the move? Fuck it. You take the move, and then as soon as you enter, right, within seconds, then it can reverse on you, and you're like, damn, why did I do that? Because you're trying to chase the profits a little bit too soon, as opposed to going after the inputs that can actually generate the proper outputs.
No, it makes sense. I mean, at times it's just it seems like I have the right direction, but it's the wrong timing, and then my stops gets eaten up by like liquidity grabs and things like that. Right. So that's kind of what I've been trying to work on as far as being more patient once I enter the session. Even though I have a finite amount of time to do my trading, I still have to relax during that hour and a half to, like you said, to kind of let it come to me. So, it does make sense.
Perfect.
That's awesome, man. Glad to hear.
Yeah, positioning yourself correctly is so crucial. And then, and Brandon and Philip, you guys can add into this, but there's the capital toll and how taxing that is on you not approaching it correctly, but then the mental toll, right? If you're in the midst of forcing a trade and then it's affecting you and then you're drowned. So now when the a new move sets up, say, for a 4-hour move on a candle or a 1-hour move you could have taken advantage of, you've already exhausted yourself.
Mm-hmm. Yeah, I mean that's a very common thing for a lot of traders, and that's why, yeah, you have to stick to the strategy because, I mean, I've done that myself, and so have many people. You try to deviate from the strategy, you think you're smarter than somebody who's been doing this for 20 years, you're going to get eaten up 100%. So, I mean, that's the really hard part about trading is that, even if you think it's just going to be a one-off thing where you deviate from the strategy, coming back to that next trade that actually does fall within your criteria is going to be hard because, yeah, you took a confidence hit, and that's a very common thing with trading. But that's why you have to stick to your strategy because your confidence is going to take a toll if you're doing something that's outside of that realm. So, I mean, there are good losses, right? Good losses are losses that you take within your strategy, and the market simply did not, go in your favor, right? There's going to be a percentage. There's nobody with a 100% win rate. There's going to be those times where you take a loss, but it's a good loss because you followed the strategy perfectly and the market simply moved against you, hit your invalidation level, and you got stopped out. It's a very simple thing. So just acquiescing with that is the first step. And then I've learned to, enjoy taking losses where it's like, okay, well, that was a good loss. That teaches me, hey, this strategy did not work within this specific setup. So, that's in my notes. What could I do better to maybe just say, I won't take this exact setup next time, and learn from that.
Hey, Brendan, did you ever have a time in your early times of when you first started trading where you were watching P&L a little too much?
Oh yeah, definitely. Yeah. I mean, that's the big thing. You get emotional once you hit a certain P&L for the day, and sometimes you can give it all back. I noticed the second I saw, like after taking a few wins for the day and I saw that peak P&L, there was never one day where I ended the day with a higher profit and loss after that. It emotionally affected me so much that those next trades did not work out. So what I learned is I'm not looking at my total daily P&L until I shut down my broker and I'm done with the session, right?
And that also goes into our conversation of focusing on the right inputs because you have to recognize money is a simple byproduct of the right outputs. When you see, it's so exciting when you hit the trading entry button and you see a dial like your car odometer, but it's not mileage, it's actual dollars. And you're like, wow, I can actually make this much of money. And you start paying attention to the end outcome, right? I mean, imagine if you're talking to a girl, you think it's going to go well. You got to be disciplined and hope back and be like, yeah, baby, we're going to have kids. We're going to buy this house. We're going to get married. Like, that's too overwhelming for her, right? You can't do that because you're jumping the gun. I mean, everything in life, there's parallels. So you can't just look at the end outcome and get excited. If anything, you need to be disciplined and you need to go, am I hitting 60 to 80% accuracy rates in general with my trades? Because that's what you should be mainly excited about. Without even looking at the P&L, you should know if you're hitting those inputs, you're for sure making money. It's hard. Like I said, I'm not denying it's easier said than done, but you got it. That's where the discipline of maybe even hide the P&L and just look at, instead of it telling you what your profits are, telling you how green you are in your accuracy numbers. So you're like, oh, okay, I'm hitting 60. I'm hitting 80. All right, like I have to be making money. And then at the end of the day, it's like a surprise. Like, oh, look at how much I actually made. So you're not tracking how much you're making in the moment because that actually can deviate and distract you from the activity of precise trading. Because as opposed to being super focused on the technical analysis, the candlesticks, the things that you're paying attention to, now you're getting too elated too fast. Now you're getting distracted by, oh, look at how much money I'm making.
Yeah, that's very, very easy to do because and we've got traders that do that. But if your system needs tweaks, I think that's what the percentage rate tells you. Is hey, I need to make some tweaks because why am I taking the losses I'm taking? What's causing it? And then you can fine tune, you can change the approach and make your way towards the 80% realm. Right? Am I taking too many trades? Am I now, waiting for it to give me all the confluences instead of 5? I'm taking it on 2. That kind of thing.
Exactly.
Yeah, for sure. So we're kind of approaching time a bit. I don't want to keep you guys too long. Any last minute questions, DeAndre or Steve?
Um, man, not really. I don't have any. I don't have anything.
Okay, cool. Anything you guys want to share before you go, Philip or Brandon?
Yeah, I mean, dude, some of the things that we learn in terms of success principles,
Yeah,
you gotta be really cognizant. Like trading is a very technical skill set, but you also gotta be aware of who you are as a person. What's your archetype? Are you naturally more of an engineer, mathematician, analyst type? Because if you are not, it's going to make trading even harder for you. Do you understand? You have to be really aware of where your own personality traits are before you choose to do an activity. And because when you know yourself more, then you can also know how to mitigate some of your own shortcomings. Trading, similar to entrepreneurship, is a huge journey of self-discovery, especially when you put real money on the line. Because now you're really going to find out, oh, am I the type that's going to revenge trade? Am I going to get overly aggressive? How do I respond to a loss? Do I want to just make up all my losses and take a profit in one go? Right? Or I even have some people in our community that see how amazing this is, but they're too gun shy to press the button. That's the opposite, right? Being very conservative. They're like, oh, I don't know. Like, the markets are moving. I know I could make money, but I don't know if I should press the button. And they go like this. It's like the deer in the headlights moment. So, what I'm saying is, trading is the very technical endeavor, but zoom out of that and do some personality tests, do some self discovery on how you naturally are as a character. There's video games, right? There's your warrior type, there's your healer, there's your magician, etc. In video games. If you're a healer, you probably shouldn't be the soldier in the front line because you're going to die really quick because you have no combat skills. That's the perfect example that I can give you, right? Now, I'm not saying if you're a healer, but you also want to be a warrior that you can't do it, but just be aware so that you take the best path and the least path of resistance towards success. Success is still going to be a difficult path, regardless. Because success is a path that's, hey, you want to have this thing? Cool. You got to go up this mountain. But it's not a linear path. On that journey to the top of the mountain, you have to understand, oh, there might be an alligator here. There's going to be some bears here. Oh, this bridge isn't fully, it doesn't have all the steps. You got to get creative to figure out how to cross over to the other side of the cliff. Oh, and then guess what? When you get to the top of the mountain, you realize it's actually not the top of the mountain. It's only the start of something that's even bigger, right? You see what I'm saying? So how do you prepare yourself for that journey appropriately? Well, if you understand what your strengths and weaknesses are, you could pack a bit better. You see what I'm saying? You got to obviously pack your waters. You got to pack your food rations. But are you going to be the person that embrace cold more? Like, how many blankets do you need? Right? Do you see what I'm saying? Like, do you need a lot more branches so that you have heat for the night? You see what I'm saying? Like, that's what I mean by taking that step back and doing that extra work of self-discovery so that you have proper prevention over treatment. So that when you get into this super technical endeavor and then you put real money on the line, you're like, all right, according to what I know about myself and my personality, here's where my pitfalls are probably gonna be. So I'm going to make damn sure that I try my best to steer myself away from those potential mistakes and do things in a way that will allow me to be the most successful because I'm now riding off the path of least resistance. It still is going to be a path of difficulty, but the one of least difficulty.
Makes
That's
perfect
good
sense.
stuff.
Amen. So I appreciate that, dude. I've dealt with that. I've been through that, especially in the trading journey, the ups and downs, the difficult steps that it takes, even because many people, are grabbing information all over the place. They don't have anything streamlined, that helps them. So by the time you bounce 3, 4, 5 strategies and it doesn't end up working, you start to have to self-reflect.
Yeah, that's why it's important to go after the right mentorship to really, at the beginning, do your due diligence, verify that strategy, and just do all the best steps that you can as opposed to jumping into it. I like to take the approach of making sure as much as I can up front. And then when I'm like 80%, 90% confident, I jump all the way in. But here's the thing. Once you commit, you fucking commit, though. You burn the ships. Because at the end of the day, like a relationship, you can't have all the checklists. You're going to have to do some work once you get past that first, second, and third date, right? I mean, there's an evolution. And that now the real work begins because your attraction for each other is still there, but, it's like, okay, you really got to get used to working with the dynamics of how you can live together and things of that nature, right?
You got to do that before the marriage.
Right. Now, here's the thing. Take that and apply it to if trading was your partner. Trading is not your romantic partner, but your monetary partner. Trading is your income partner. Trading is your wealth creation partner. How are you going to treat each other? And how are you going to embrace each other? And what kind of dynamics are you going to have, despite any ups and downs?
Yeah. Are you making time for it? Are you willing to grow for it and adjust your previous way of being to become somebody that is capable of merging together with this endeavor and making it happen?
That's right, man.
Yep. Takes full commitment. That's what it's all about. You have to commit yourself to it. So.
There was one thing that we can leave you with. What is the most wise saying of all? And there's a lot of them. That what goes around comes around. I don't know if you have any other ones, but there's a whole lot. Right? Do to yourself? Do unto others what you would do to yourself, what you would not do to yourself. Right? There is one by Aristotle, which is to be angry is very easy. But to be angry at the right thing, at the right person, at the right time, that's difficult. So now, Steve, go back to the conversation that started this. To be patient in general is easy. But to be patient at the right time, at the right trade, at the right setups, that's difficult. And you can embrace that wisdom, and it will still be hard for you to swallow it. You see what I mean? That's why success is not meant for the faint of heart, especially in regards to business and entrepreneurship. It is a non-linear path.
You got to be able to travel through the unknowns.
Right. 100%.
Awesome. Hey guys, thank you guys so much for your time today. I hope this helped each, and every one of you that are here live and who will watch the recording, because this is very impactful. These are things I wish, I heard when I first started. I had to kind of learn it and stumble upon it along the way. But it hits on every tone that's going to adjust your performance level and who you are and how you approach the market each and every day, because it is possible. It's possibly profitable weekly. There's nothing holding you back but yourself at the end of the day, and just adjustments you haven't made yet. But you'll all get there. I believe each and every student that comes through ITU will get there, and then we'll definitely open up the doors then to Lightspeed, and man, you guys will take it to a whole nother level for them. So really appreciate both of you guys taking the time out to do this.
Absolutely, man.
Thank you very much.
Appreciate you.
Yes, sir. All right. I'll catch you guys we'll do another one next month.
Yeah, Zae, if you don't mind, what I'm going to do here is I'm just going to connect with you one-on-one and after your students and Brandon has left.
Yeah, for sure.
Alrighty.
But thanks so much, man.
Thank you.
Appreciate y'all.
Yeah, thanks, guys. All right, perfect. Cool. I'm going to take a call here, but yeah, great meeting you, Zae. And
You too, Brandon.
all right, have a
Thanks
good
for
one.
stopping in. Yeah.